Hello, my name is William Kumwembe and this is Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. And coming up in the program today, we look at Malawi's historic forex challenges and its impact on growth strides. Is there a way out? And also in the program, we look at prospects in the mining sector as the next possible big thing in addressing the forex scarcity in Malawi, with initiatives like the Kassia Graphite project said to have potential of generating $16.2 billion over its initial 25-year lifespan. We have these and other stories. Stay tuned. Welcome. In our main story in the program, for over 6 decades, Malawi has wrestled with same stubborn problem: no enough foreign exchange to keep the economy running. Fuel queues, medicine shortages, and companies unable to pay suppliers abroad have been the after effects of the situation. This is a result of inability by Malawi to produce enough for the export market, coupled with Malawians' insatiable appetite for imports. In this report, Chimwemwe Mangazi examines how the private sector has fared in its quest to addressing the problem and what does the future hold. As Chimwemwe Mangazi is indicating, there is more that needs to be done.
This is not a new crisis, but it may be the most serious so far. Malawi's gross official foreign exchange reserves dropped to a historic low of $70.3 million in August 2025, less than a third of a month of import cover. The kwacha has been under sustained pressure. Imports are now more than triple exports, reflecting a weak and undiversified export base, while official reserves remain critically low. Malawi has for decades exported a narrow basket of raw and processed commodities, predominantly tobacco, while importing fuel, medicine, fertilizer, and manufactured goods. The result is a trade deficit that has never been tamed. The IMF has flagged that spending more than the country raises in revenue floods the economy with kwachas, and with more kwachas and fewer foreign currencies, this creates immense pressure on the exchange rate, feeding a parallel market and deepening the crisis. Business leaders say they are doing their part, but argue that the system works against them at every turn. Wesley Piri is immediate past president of the Malawi Confederation of Chambers of Commerce and Industry.
If I'm being honest, the private sector is doing a lot. Even the few forex that is coming in here is coming from the private sector. We've got people that are exporting. Actually, for example, in academia, we've done better than before. We've got our members that are able to export. Even if you look at last year, the services sector in ICT, where I come from, has also performed well. We're talking about over $150 million. It might not be enough, but these are the things that we've been able to do from the private sector. But now you look at it, we've done this, we brought in money, might not be enough, but how is this money being used? The first one is where I'm saying you getting 30% into government side, to the Reserve Bank. But then, if that money, you've moved it out, I'm not able to access it, how do I scale it out? I will not be able to scale it out. So private sector is doing the best in the environment where we are. Government also have to do their side. You can't have everything else you exporting, bringing forex, then you've got government using it for other things. Of course, we talk of AIP. We're hearing this might change how they will be doing going forward. But we're talking of the monies that are going now to AIP, the monies are going somewhere else. Can we balance it? So the other thing that I always say is, if we're generating this forex into Malawi, can also government be able to be buying these things locally?
Piri's sentiments are echoed by Kwanele Ngwenya, Group Chief Operating Officer for Nico Holdings.
The private sector is one that generates private sector. Government's role is to create a conducive environment, policies, and a legal framework that can give the private sector springboard to develop and products that are exportable to drive the forex in our country. Yes, we appreciate the challenges that are facing our country as far as forex is concerned, but we are doing our little bit Hence, we're building the hotel, which is part of driving the forex income. And there's more that we'll be doing in terms of driving the forex income in the country.
Beyond the export gap, government has also identified a less visible but significant problem. Forex that is earned inside Malawi but never enters the formal banking system. Minister of Trade Simon Itaye says government is now turning its attention to both the leakages and the structural reforms needed to change the long-term picture.
We want to engage the MCCI a lot more than we used to do in the past. So we would like to engage them because we know the areas that are not conducive. We know the areas that make business more expensive in Malawi. So we are looking at it. We are reviewing a lot of issues. We are reforming a lot of issues. MITC, for example, we are looking at MITC, how it's assisting our investors and how best we can reform it so that it does assist the private sector. So we are aware of the areas that we need to address.
The fuel queues outside filling stations are the most visible symptom of a crisis decades in making. The diagnosis is not disputed. Too little exported, too much imported, too many earnings lost to leakages, and too many policies changed without warning. What remains contested is whether the government and businesses can finally move in the same direction.
Now, as highlighted, one of the top drainers of forex in this country is fuel. Malawi's annual fuel imports bill is approximately $600 million US. Yes, whopping $600 million US, which could be almost 20% of the total imports. No wonder the country has been experiencing significant fuel shortages due to forex constraints, with importers accessing dollars at high parallel rates. As McLeod Chiangiza reports from Zuzu, the problem is not anywhere near ending despite continued assurances from the government officials. As we hear in this report, businesses are at a standstill and consumers are finding it a little hard to secure fuel, which is, of course, comparatively expensive.
Queues like these have almost become a norm in Malawi. Throughout the country, motorists are seen queuing for hours at a filling station like this one here, even late at night, hoping to access a few liters of fuel whose supply has been intermittent. Blame now is on the geopolitical tensions in the Middle East, whose air travel distance to Malawi is equal to about 3,393 miles. But the impact is severely felt by businesses and consumers here at home.
The business is so down, I can't lie, because, you know, as you can see the queue here. So we're not doing business since now it's 2 days ago. So we have family, we have our kids who are depending on us. So we're failing to reach that.
The situation is not quite okay even on the black market. Like the experience that I had yesterday at Kasungu, it costed me around 12,000. Coming to Gender, it was around 10,000 on the black market. And that is quite huge compared to the actual price of the fuel. So you have to dig deeper, almost times 2 times 3 of the amount of money that you are supposed to purchase the fuel. So that is not very convenient for most of Malawians.
From a look of things, there is more to the fuel scarcity now than the US-Israel-Iran war. That's forex scarcity. On average, Malawi consumes roughly about 60 million liters of both petrol and diesel a month. For decades, footing the fuel imports bill has been a challenge, evidenced by volatility in supply since 2010, and authorities attest to this. Prices have not been stable either. Just within the last 4 months, fuel prices have been adjusted twice to 6,687 kwacha per liter of petrol and 6,687 kwacha for diesel. Authorities say the price increase was necessary to maintain stable fuel supplies amid global price volatility and geopolitical tensions, including conflicts in the Middle East. But the situation has worsened. Efforts to find alternative solutions have also faced setbacks.
There are a number of issues that has contributed to that, but what I can just say in summary is that the major hit was on the forex for us to purchase the fuels. So I'm happy to report that we have since managed to secure the forex for us to be able to pay for the fuels.
In 2023, Petroleum Importers Limited explored a deal that would allow Malawi to pay for fuel imports using the local currency, but the arrangement failed due to uncertainty surrounding the kwacha's exchange rate. The debate over the fuel crisis has also been fueled by conflicting messages about Malawi's foreign exchange reserves. According to the Reserve Bank of Malawi, the country recently recorded an import cover of about 2 months. Analysts say lasting solutions will require stronger economic fundamentals, increased foreign exchange generation, and a stable fuel procurement system. Until then, the long queues at filling stations may remain a familiar sight for many Malawians.
And the store of tobacco, the once touted top forex earner for Malawi, is not as appealing anymore. The 2026 selling season commenced on April 20th with expectations that the country would generate substantial foreign exchange to replenish its reserves. However, the market opened on a gloomy note marked by high rejection rates and low prices offered at the auction floors, developments that have cast doubt among farmers over this year's performance and dampened expectations from so many other stakeholders. Earnings in the first week alone stood at $4.85 million, approximately 8.7 billion kwacha, which is way lower than the $15 million, about 22 billion kwacha generated in the first week of the 2025 season. Should Malawi continue banking heavily on the leaf for ending the ever scarcity of forex, or probably it is high time we face the reality that the green god has withered? Benedetta Tuandamia has more in this report.
We are at Limbi auction floors. This is the tobacco market for the southern region. All the farmers in the southern region who produce tobacco, this is their market. On a day like today, the official opening of the market, you would expect joy, you would expect excitement from the farmers, but the picture is different. 994 bales have been laid on the market on the first day, and 4 tobacco buying companies are participating on the market. Talking of the prices, it's a mixed picture. The highest we have seen is $3.05 per kilogram, and this is mostly on the contract and specifically being offered by one company, JTI. On the lowest side, the prices have gone down low up to $1.20. On the other hand, there's the issue of rejection rates and no-sale tobacco. Specifically on the auction floor, for the opening day, 100 bales of tobacco have been laid to be sold. But out of these 100, only 3 bales have been sold. The rest have either been rejected or there's a no-sale sticker on the bales. On the contract side, also talking to some of the farmers, the picture is a mixture as well. Others, while they've gotten better prices up to $3.05, others are also bemoaning the low prices being offered. Tobacco is a strategic crop. It's an economic crop for Malawi because tobacco makes up over 60% of the country's export earnings, making it a strategic crop. This is the third market that has been opened following after the opening of Lilongwe auction floors as well as the opening of Chinkhoma auction floors. But the picture is the same. Farmers complaining about the prices, high rejection rates and high no-sale rates. Given the picture on how the market has started this year, what does the farmers themselves have to say in terms of this year's market?
My impression is that tobacco on contract market is okay. And thank the buyers, including tobacco commission, because the buyers are offering better prices on the contract side. But on the auction, it's sorry here that the total consignment, only 3 or 4 bales have been bought. This is not good for a farmer because as time goes, the grade might change. Changing of the grade, it means even the price itself also will change. And the loser is the farmer. So it's my prayer to all relevant authorities, including government, to find other means so that the tobacco auction can be bought.
Minister of Agriculture, Rosa Mbirizi, when she was touring, moving around, checking the leaf that is on the market and also the prices being offered, she did acknowledge of the low prices that are being offered. And also she did raise concerns about the high rejection rates being recorded on the market.
The auction side, I see that the rejection rate is the same all over, from Goma, Lilongwe, and here. It's way above 95%, and that is very worrying. But I've assured the farmers that the President and my ministry is working very hard to make sure that all that tobacco is sold. And I've told them that we are a government, and the government will always find a solution, and we will find a solution, and that will be very soon.
Now, another reality that Malawi has to come to terms with is the fact that tobacco production and the earnings haven't been good over the years. High cost of production has left farmers with little or nothing left after they have sold and paid back all the loans for the inputs. And on the other hand, the forex that is earned is not enough even for government to meet its import bills. There has been talks of diversification, but that is a gradual process, which means tobacco still remains a strategic crop. But as it stands, looking at where we are coming from, where we are at the moment, and the outlook even for this current marketing season, the picture does not give that hope of tobacco being the answer to the challenges, especially foreign exchange challenges, that Malawi is experiencing.
Remember, you're watching Business Time, a magazine program where we bring you major business and economic news stories making headlines in the country. My name is William Kumwembe. We'll be right back. Welcome back. This is Business Time, and moving on. Amid forest scarcity, mining is seen as the possible next big thing for Malawi. A definite feasibility study by Sovereign Metals Limited, owners of the Kasia Rutile graphite project, for instance, projects that the mine could generate $16.2 billion, about 28.37 trillion kwacha in total revenue over its initial 25-year lifespan. And the definite feasibility study, which is a comprehensive technical and financial analysis used to demonstrate a project's viability and secure funding from banks and investors, seem to give some nod of hope. According to the study, the mine is expected to generate an average annual revenue of $728 million from mineral sales. Once operational, output is projected at 222,000 tons of rutile and 275,000 tons of graphite annually. Sovereign Metals Limited Managing Director is Frank Edgar.
We will produce rutile, which is 95% titanium dioxide. Right? That's the purest form of titanium that you can find in nature. In the soil, you have a rutile content or a grade of 1%. So of every ton of sand that you see or that we mine, only 10 kilograms of that is a product, is a final product. So I think, so what we will do is we will mine 1 ton and we will beneficiate that raw ore into a final product of 95% titanium dioxide. That titanium product is used to produce titanium metal. It's a direct feedstock for titanium metal. It's a highly specialized, high energy intensive process to produce a titanium metal. Titanium metal is used in aeroplanes. It's used for the landing gear of the Airbus A380. About a third of a American F-35 fighter jet is titanium alloys, titanium metal. So if you wanted to produce something further from the rutile, you would have to look at producing titanium alloys, something that can be used in an aeroplane. So that level of sophistication is something which you would have to bring into Malawi if you wanted to produce something downstream from rutile. It's a very specialized product. It's a final product. We will produce ultimately a final product that goes into a titanium alloy process. So, like I said earlier, I think long term, it's something which the country needs to look at. We definitely don't have the capacity to make aeroplanes. I'm not sure who in Malawi has the capacity to make aeroplanes, but there are potentially components of an aeroplane that can one day be made in Malawi if you have the expertise, the capacity, the environment, the energy available to do so. Now these things are made in Japan. Airbus, Boeing buy their products from the Japanese titanium metal producers. The American military buys their titanium, the military-grade titanium alloy from the Japanese companies. We don't have the capacity to produce those things here. We won't have the capacity for some time. And certainly the environment needs to be created, to attract people or companies to come and produce those things here.
Now, another business news, FTH Bank says it remains systematically positioned to contributing towards growth of the economy. This was said at the Investor Forum in Blantyre on Tuesday. We caught up with officials who start by giving an insight into the firm's 2025 performance.
Obviously, we've contributed quite a lot. It started at 8.9 billion in 2021, as indicated. But as of today, as of December 2025, we had given out over 105 billion, a significant contribution that we believe actually assists in the, assisting the government to operate smoothly. First things we need to understand as a bank, our primary focus is to intermediate. Intermediation is where you put your funds to places where they've got deficit, and in essence what I'm driving at is that our major role is to give out loans. So when it comes to government borrowing, that one is just supposed to be supplementary. But in the case of Malawi, what has transpired is that over the years, government has been borrowing quite a lot, and as a result, that's why you find that a lot of banks are actually taking a good exposure to the government debt. So in the current situation, we believe this is a strategy that government has taken, and that strategy has resulted in, you can see the drop in the policy rate, and understandably, the intention is that this should even decrease further. That is now an opportunity that has opened up, so that we believe a lot of the private sector is going to come to the banks and borrow quite a lot than what they've been doing before. We had to look at ourselves and say, how far have we grown? And is there any other room for us to expand within the Malawi? It's when a thought came to say that maybe we should try, across the region. And indeed, during our due diligence, we actually found out that it is important that we go to Mozambique, and we are there. We are proud to be there. Of course, as we stand, as indications were made, the situation is not as rosy as was expected, but within this year, we expect to see the bank doing quite positively. As you are aware, Malawi is now into mining. There are stories around in terms of what minerals we have, and it is on that basis that we thought we also need to go into that, because it's an opportune area. So as we stand, what we intend to do is partner with what is called Malawi Mining and Investment Company. Mamico is a government entity. What they want to do is manage issues to do with the gold, and our intention is to cooperate with them, to partner with them. The arrangement will be such that all miners will be placed in cooperatives, and it is those cooperatives that we are going to be handling. So what will happen is that as soon as they mine gold, they'll come straight to the branches, the different branches that are spread across Malawi, and then immediately we give value for that gold, and they get credit for that. So it is on that basis that we believe this is the right way to go, and it is something that is going to change the fortunes of the country.
Well, with that story, we've also come to the end of today's edition of the program Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, my name is William Kumwembe. Thank you for watching. But always remember, if it doesn't make money, then it doesn't make sense. Stay safe and goodbye for now.